eye out on some of these logistics stocks. Of course, there are brokerage notes that are positive on the logistics space as well. Plenty of other stocks to look at this morning. Overall, for the market, looks like it's going to be a decent start. 21,200 is something that the street will hold for now, and led by a lot of heavyweight names. So just look at the top gainers in trade at the moment. In pre-opening, there are IT stocks. LTI Mindtree is up 1.5%. Tech Mahindra is up about 1%. Autos are coming back. Bajaj Auto is up almost about 0.6%. And in the broader markets, plenty of other stocks to watch. We are, of course, heading into a long weekend, so there won't be any cues from the US markets on Monday, and our own markets will also be shut. So trade, the volumes, etc., might be on the lower side. But other than that, individually, there is lots to talk about. Many order wins that have come through as well. RailTel, one of the stocks in focus there. But let's take it straight to the first tick on the index. 50 points higher on the Nifty, a good start there. The Sensex is up about 100 odd points. The mid-cap index is open to a strong showing as well, 250 points higher. The Bank Nifty for now is refusing to participate, but let's see early moments yet of the day. The advance decline ratio has almost 2,000 stocks on the advancing side. So it's looking like a decent screen at the moment. What's leading from the front is some of these power stocks. NTPC is up about 1%. Then you have LTI, Mindtree, Eicher Motors, Adani Ports, Hindalco, ONGC, HCL Tech, that are your big gainers. By big, I mean like about 0.5% to 1% gain at the max. Bank Nifty is the one that's dragging its feet a bit. ICICI Bank, HDFC Bank, SBI, Kotak Mahindra Bank, flat with a bit of a negative bias. So that's just the little bit of dampener this morning, and that's making sure that the Nifty doesn't get above the 21,300 mark. So flat opening, you'd have to say, with a bit of a positive bias, led lower by the Bank Nifty, which is dragging its feet. Infosys is also your top loser at the moment, down about 0.6%. But other than that, the mid-cap index is having a good showing.
Well, that's right. So I think at around 21,300, if getting into a long weekend, you want to enjoy Christmas, maybe taking some money off the table at around that 21,300 may not have been such a bad idea. As we speak, the markets have come off that level. We're only holding with a gain of around 10 points. Let's run you through the stocks that are moving around. The all-cargo stocks, logistics as well as Gati, owing to that scheme that has been announced overnight. Both of them are between 7 to around 9%. Remember, they went into this event at the high point of the day, but clearly the street likes it because there is follow-through buying that we're seeing out there. AMI Organics, yesterday we had a large trade that took place. Then they announced some progress with regard to that electrolyzer as well later in the session. So that stock, in fact, from yesterday's block trade is up closer to around 15%. Nimesh was the first one to alert us with regard to that block deal. So that's out of the way. The stock is flying away. The other couple of big movers today, you have RailTel, they won that small order in there, but the street likes it. The stock up closer to 2.5%. LIC, they'll get more time to meet those minimum, shareholding norms. So that's why that stock is well up closer around 7% as we speak. I think that's at a multi-month high. So that stock doing pretty well as well. On the flip side, I think just a few stocks to highlight that are on the downside. You have Nippon Life India, well, that's a little bit under the weather, and Polycab pulling back a little bit. Siemens posts their analyst meet and brokerage notes. Street likes it, up close to 3%, and GMR Airports continues its northward move, 2.5% higher out there.
LIC, guys, right?
Yeah,
LIC
flying.
is 7% higher, so that's a big one. And it's, by the way, the top volume traded gainer across the board. So it's a very, very large move. What else, apart from what we've kind of highlighted? I think all cargo is another one. Mangalam, of course, discussed this earlier in some detail, 8% on that one. There's a Siemens analyst meet. AMI Organics, Nimesh has been highlighting for the last, actually since yesterday. There is RailTel, which is up 3.5%. Pull up Cyient. Cyient is up 4%. By the way, the management joins us in a bit from now. So almost 2,400 on Cyient. Adani Total Gas is up about 3%. Stocks at about 1,012, 1,013 for now. There is Piramal Pharma, which is up about 2.75%. The wealth management company, the IIFL Group, 361. So that's 3% higher coming through. Rate gain saw a very sharp move in the last hour yesterday, ended 7% higher, and rate gain is up another 4%. I think we had the management with us. It was yesterday or the day before, but that is flying as well. There is V-Guard, which is up about 4%. Inox Wind is up about 3.5%. Keynes Technology is up about 3.5%. All of these diagnostic companies had started on the front foot yesterday. I can spot ThyroCare which is up about 4% as well. Market breadth is overwhelmingly in favor of gainers. So there's nothing at all which is down, except Varun Beverages, which is pulling back a little bit after what we've seen. Varun Beverages is down 4%. 1,243 is where we are coming in at. Well, our market master of the day is Sandeep Bhatia, head of equity, India and country head in India at Macquarie Group. Sandeep, great to have you back on the program. Thank you very much. Almost wrapped up with 2023. If I can start before asking you, what the future looks like, but if I can ask you to reminisce a little bit, what were the, say, top 2 or 3 surprises from what you thought when you came into this year and how it actually panned out?
So first, wishing all of you and the viewers a Merry Christmas season and a great New Year. All our offices in Christmas colors, and so am I. So the biggest surprise as we look back on 2024, I think twofold. One is what happened in the US. The recession never happened. And the rate cycle has peaked much faster than most people thought, without doing any significant damage to the US economy. The only political uncertainty that remains is the 2024 elections. And the surprise here is that most of the time people talk about Indian elections throwing a negative surprise. But this time around, it seems that people are worried that the US election may throw a negative surprise. So clearly, how tables have turned and how life changes. So clearly, political uncertainty and disputed election results may be a risk for the US. It doesn't seem to be a risk for the Indian elections. As far as surprises in India are concerned.
Sure, go ahead, please.
I think it's a positive surprise, better than most people would have thought at the beginning of the year, is the continued strength in the economy and the fund flow from domestic savers into stocks. Despite some bouts of corrections, the retail investor and the SIPs, the systematic investment plans, continue to get inflows. So these are the 2 things which I wanted to flag as I look back on 2024.
Okay, well, look at the Varun Beverages stock, by the way. It's down almost about 3.5%. It's had a dream run in the last 1 year or so, and just some profit taking is what we're seeing. Sandeep, as we head into the new year, what are your preferences in terms of sectors? Any themes, sectors that you're bullish on, where there could be alpha generation this year?
I think clearly there has to be now sector rotation on the back of what I think would be a stronger reform push post-July, when the new government will be able to present its full budget. The Feb budget will be a vote on account, as the finance minister has already discussed and told us. So I think the expectations are for a broader industrial, manufacturing and consumption push. I'll say consumption also, because in the run-up to election, generally there's an increase in spend. Also the fact that India is seeing very strong revenue growth, and one of the best ways to grow consumption is probably to also do a lot of welfare spend. I think that this government will also continue its welfare spend and boost the rural economy. So I think in the run-up to the election, one has to look at if there's a rural rebound, and post the July budget, if there is a trust on broader consumption and broader investment growth. Capex rebound from the private sector has been slow. That's one thing which I'll wait for to see if that comes through in the second half of next year.
Hi, Sandeep. Morning, and good to see you in, and compliments of the season to you as well as your team as well. I think when we spoke a couple of months or so ago, you were hinting that maybe the ferrous space could do quite well. And that's where alpha could be generated, if I remember correctly. I'm looking at the Chinese data out there, and it appears it's still to pick up. But the good news is spreads over there are at very depressed levels. So things maybe can only improve from here. Do you think that 2024 we could see some of these steel stocks outperform?
The steel stocks will outperform if control of supply in China can continue. So that kind of supply control and production control, if China can successfully put in place, and also the broader, what is called this, the broader emerging markets, the poorer parts of the world, see a stronger growth coming through, then consumption of steel can come through. But it's entirely dependent on what happens in China and what kind of control is exercised by the Chinese government. Our understanding is that China wants a revival. It's trying its best to revive consumption, shift its entire economy, which was a very production-driven, manufacturing-driven economy, to consumption. But there are headwinds, especially in terms of consumer confidence there, especially in terms of the entire property sector. So if that happens, if they are able to exercise control on production, we will see a rebound in the ferrous side.
Okay, I got it. You know, when one kind of looks through, Sandeep, are there real underperformers? I mean, actually, even as we came into 2023, there were those pockets, right? Maybe power had not done as well. IT services, maybe, especially on the mid-cap side, etc. As we head into 24, are there really sharp, areas where which have not performed? I mean, which gives you that comfort. Maybe chemicals is one, but that's a very small space. What's your sense? I mean, you basically got to buy stuff which is already done very well.
I think that's a fantastic question. What do you buy? Because everything is expensive, everything is done well, and do we just continue to ride the PE expansion and price appreciation graph, or we wait to see there is a major correction? I'm not in the camp that in the short term, which is the run-up to the elections, we can see a major correction. By a major correction, I would think a 10+%. So ideally, a 15% correction would be would classify at least as a major correction. Anything over 10%. But as we've seen just 2 days ago, any sharp correction is actually sees quick buying come through. So unfortunately, I think for investors, it's a market with expensive pickings. I would think, therefore, the right strategy would be to position yourself in sectors which are sort of underperformers. So as I said, consumption can be the dark horse for next year, because there are some very high quality companies and everyone thinks that consumption is going to continue to remain weak. But if you take a 2-year time frame, we could have a better outlook on consumption come through. The other, of course, is the entire public sector enterprises. So that will be one sector which generally is cheaper. And in that, I think public sector banks are large, liquid. And the cycle that we are seeing, we have seen RBI do the right moves. They have tightened risk-weight assets. They're trying to control the consumer lending, that's happening. And if we see corporate lending and infrastructure lending come through in the second half of this year, public sector banks are well positioned to take advantage of that. So I think these are the two parts of the stock market which have broadly been underperformers or cheaper. Take your pick, and you could look at them performing.
Okay. There are a lot of big events that are coming up in the new year, right? There is, of course, the elections. What are the spaces that you think could benefit from that? There will be a pickup in infrastructure spends, I'm sure. A lot of infrastructure stocks have been doing well so far. What else? Where else do you see the opportunities because of these large events upon us?
I think the common knowledge is that there is more government spending in the run-up to the elections. Actually, we have not seen that happen in a remarkable way pre-elections, at least in the last 2 elections per se. And the government broadly seems to be on track to meet all its fiscal targets. I think what is important is to actually acknowledge that one of the key reasons why the continued success of the current government is the effectiveness of delivery of subsidies. And I think all that can continue post-elections, more likely than pre-elections. But broader consumption revival is the theme which I've talked about in this interview, and I would think that I'll monitor that in the run-up to the elections.
Okay, broader consumption revival, got it. Thanks a lot, Sandeep, for joining in. Appreciate your thoughts here on CNBC-TV18. And once again, from our entire team to yours, thank you for being with us through the year, and all the best for a great 2024.
Thank you.
All right, let's move on now. Let's focus on IGL. The company has completed 25 years of its incorporation, and in these 25 years, it has grown to be one of the largest CNG distribution companies of India. Kamal Kishore Chatiwal, who is the managing director at Indraprastha Gas, joins us now to discuss how the journey has been so far and what's next for them here onwards. Kamal, thanks a lot for joining in. Of course, we tend to look back at the journey of the last 25 years, but I think your shareholders will want to know what do the next 20 years look like for the company, right? So tell us about the big growth triggers that you see and where do you see the big opportunities for IGL?
First of all, a very good morning to all your viewers. And I would also like to congratulate CNBC for completing 25 years.
Thank you.
I understand you are also in the 25th year, and it has, we have grown up, or rather seen your growth throughout these 25 years. And the way you have revolutionized the business reporting space. So we have done the same in the CGD space, that wherever you find that name of CGD or anything to do with CGD, so IGL is up above there. So having said that, in the last 25 years, the way we have grown the infrastructure and proof of concept, starting from a proof of concept phase in 97, 98, to today, where the model of Delhi and NCR is shown everywhere. I mean, the regulators, government, they are proud of our achievement, IGL's achievement, and that is being showcased as a case, a big business case for CGDs around the country, not only, also in the world also, that is being shown. That the way we have succeeded in Delhi, I'm sure since we have gone out of Delhi now, we will continue to do that. Okay. As far as the shareholders are concerned, the way we see the future. So one of the sectors which is in the prime right now and which can propel the growth of, or rather I should say, the share of...
I can't hear him.
Oopsie, I think
other sectors...
Yes, sir, go ahead. Go ahead. We lost you for a bit, but you're back with us, please.
Yeah, I think just like the fertilizer, there's stagnation there as far as the natural gas growth is concerned. Power is struggling to use this gas. So only sector that we see which can take India from 6% to 15% is the CGD sector, where we see tremendous possibilities, in the sense that now that after the 12th round of bidding, almost 100% India would be covered through allocation of geographical areas. So in that sense, and if you see the last 5 years growth, so from 1,400 odd stations to now more than 6,000 stations. So huge growth has been there. And the way the conversions are taking place in NCR, I can speak of Delhi, NCR, Noida, because here the commute is slightly more. So what we see is that around 25% growth in CNG, and when we were talking to Cyient representative, and he informed us that the growth in CNG sector, as far as the vehicles is concerned, is around 45%. Whereas the other sectors are the petrol versions are growing at 6 to 7%, but CNG segment is growing at 45%. In NCR, we see the conversions also at more than 16, 17,000 per month. So that's the number we are seeing. So we are confident. So one is that we continue to grow the infrastructure that we have created, not only in Delhi NCR, but outside Delhi NCR. And once the sector consolidates, so there will be more such opportunities, because companies like IGL and bigger companies like IGL, they can accelerate the pace of development of infrastructure.
Yes. Got it. All right. Good morning, sir. Yes. Good morning, sir. And, good to grow up together. As you said, 25 years hand in hand. It's been a good journey for both of us. And, you have broadly stated, how do you see things shaping up? Let's talk about the near term, though. FY24, you all were guiding that you'll hit an exit run rate of close to around 9 MMS CMD. Are you on course for that? Point number one. And also your industrial PNG volumes for the past month, that is in November, I think there was some kind of softness over there. How are things shaping up post that?
So first is that we are confident of closing at around 9 million per day. because the station commission planned during the year, they get commissioned mostly in the third and fourth quarter. So as our stations get commissioned, because recently 4-5 stations we have commissioned recently, so those volumes will come up. We are confident of exiting the year at around 9. And as far as the second question is concerned, the industrial segment, yes, there was some price disadvantage, I would say, and you are aware that that is because of the taxation, because it is not in GST, so pass-through is not there. But we are recalibrating our pricing strategy around industrials. So with that, we plan to make it more competitive so that there are more. One of the positives that has come up in NCR has been the mandate of CAQM, where they have mandated even the DG sets used by individuals, other than the commercial, they are also being converted. So there we are seeing a huge growth. In addition to that, all the industrial clusters around Delhi NCR, say 150-kilometer radius of Delhi NCR, so that have been converted, that have been connected rather by IGL. So we were given a mandate of around 125, 130 industrial clusters. So we have completed that. So once people start, and there is a growing awareness about this fuel, so people, once they start converting, we are confident that this industry.
Right. I think, right. Mr. Kishore, thanks for that. Good morning. Prashant here. I have two questions, sir. One is just to kind of take off from what you said. I think the situation in terms of global gas prices, etc., was pretty different a year ago, a year and a half ago. Now they're much more well-behaved. The winter in Western world, but I don't think we're seeing any sharp spikes, except the fact that recently, because of this Red Sea issue, we've seen some spikes come through. So I just want a quick sense of that. I mean, is that likely to impact, how is that likely to play out for you? That is one. And second, if you can talk to us about if you have any more clarity on the Delhi EV policy and the impact. Because last time, you'd said that the impact could be about in the range of 3 to 4% of volumes. Do you have a better sense now? Go on, sir.
Yes, sir, we have a better sense. Yes, you're right. The prices are more or less stable now. The spot prices are in the range of $11, $12 per MMBTU as of now. There was some impact of Red Sea. There was more on the crude side, and gas was slightly less impacted by that. Secondly, as far as the EV is concerned, we see that the reaction was, in my opinion, overstated. I mean, we had a very conversion rate. The way the people are converting to CNG is still robust, and only the DTC volumes we see that they are going down. But again, some of the volumes have gone up, and we have been able to not only maintain but increase our volumes in that. So we feel that going forward, there will be a space for CNG also in addition to EV. Because that is the natural transition we see, that once you have diesel, then you have a transition fuel, natural gas, and then you have the electric.
Correct. Can I ask you to specify, sir? Last time you had said the impact could be 3 to 4% of volumes. Will it be less than that now?
I think that with the increase in the passenger vehicle segment and other segments, the commercial segment, the impact could be even less than that.
Less than 4%.
We are increasing the volumes. The way we see that every month our volumes are increasing.
Okay. In Delhi, I wanted to understand, Delhi is also focused on some other transportation segments for going electric, right? What can this mean for sales to, say, the buses segments, autos, personal four-wheelers, etc.?
You see, bus segment is 6 to 7% is DTC. So that we have factored in that going forward in another, say, 2 to 3 years, 4 years. So that is going to be electric. Because the way the pollution situation in Delhi, we see that playing out. But we are increasing our infrastructure in Delhi NCR region because we still see huge queues. And that is one of the factors that is deterring people from converting to CNG. So that problem, that issue, we will be going to address in the near term of 1 or 2 years.
So when you say increasing your infrastructure, can you just give us some details? What does this mean in terms of expansion plans? And is it only Delhi, or is there some other geographic expansion that you're looking at as well?
So Delhi NCR continues to grow, and we will continue to expand there. In addition to that, all the other GAs in UP, Rajasthan, Haryana, whatever we have, we are expanding the infrastructure also there. So that right now the perception about CNG is that there are huge queues and those issues are there. But at least in other GAs where we have land easily available and we can develop infrastructure fast, there we want to showcase that, you can easily go to any station and get it filled. So that will, I think, increase the conversion.
Right. And your capex plan that you had laid out, I think, was 1,500 crores, right? So no pullback out there.
No pullback over there. In fact, one of the other segments that we are looking at is the LNG segment. Right now, one of the challenge in using LNG in northern India, I feel, is that the transportation cost, because only either you take it from Dahej, Hazira or Dhamra, wherever you take it, is more than 200 to 300 kilometers. So transporting LNG through that distance requires a huge cost. So we have a thought that in case we can liquefy LNG lower than the transportation cost and below $3 per MMBTU, then that makes a business case for use of LNG in the commercial and heavy duty segment.
Okay.
In fact, we are setting up 3 to 4 LNG stations along the Golden Quadrilateral immediately. And going forward, that continues to be one of the areas that we'll be working on.
Okay, all right. So that's another opportunity. I think a couple of brokerages have mentioned as well about that LNG opportunity. But the capex number, just to reconfirm, 1,400 crores, right, is what you've laid out?
1,400 to 1,500 crores would be there.
14 to
because in case the
1,500.
LNG pilots also come on stream and 2-3 projects of LNG are
Got
there.
it.
So
Let's get a couple of more numbers, sir, since we have you with us. X of cab aggregators, your volume growth you had guided for FY25 was around 8-9%. You stick by that?
Yes, we stick by that. 9 to 10% growth will be there.
Okay. And finally, the EBITDA per unit, you've been in the vicinity of around 8.5 odd. You can hold on to that?
Yes. Yeah, above 8 is our target. So we'll be continuing to maintain above 8.
Above 8.
Recently, there was some, as you know, the APM allocation has gone down by 17%, but we are confident of maintaining 8 because we are bringing in some operational efficiencies. So with that, we will be able to maintain it.
Well, it's been a pleasure talking to you, sir. Thanks so much for joining in on CNBC-TV18. Congratulations on the last 25 years and wishing you all the best, you and your team, for the next 25 years as well. And thanks for being a friend for the last 25 years.
Thank you. And on behalf of entire IGL team, I also wish you a very happy, or rather I would say you have completed the silver phase and now you'll be entering the golden phase of your journey.
Lovely. And Happy New Year, sir, to you. Thanks so much for that. Well, for the time being, though, we'll have to slip into a short break. When we come back, we'll get to our special offering, Big Winners of 2023. We'll connect with the management of Maharashtra Seamless. You stay with us.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. You got the market, which is up 24 points. So it's a quiet Friday as things are panning out so far, but it's still early days. Now it's time for our segment where we kind of showcase the big stock winners of 2023. I think, from the IT services, mid-cap IT services space, one sort of name which stands out and needs really no introduction is Cyient, which has gone up 200% this year. After, if you look at the stock performance before, the last couple of years, it was middling, but this has been a really transformational year for the company, both in terms of share price performance, but business developments as well, demerger, etc. We have Mr. Karthikeyan Natarajan, Executive Director and CEO at the company, joining in to take some questions. So thank you very much. Great to have you with us here. Appreciate your time here on CNBC TV18. Prashant this side. Let me just begin by kind of reconfirming with you what you told us your FY24 revenue growth should be like. You told us between 15 and 20%, and you said that in the previous quarter, you said that you'd be at the lower end of that particular guidance. Now, commentary from, IT companies, telecom companies, etc., is that spends are a little compressed. We also heard from Accenture when they reported numbers recently. Could you shed any more light, sir, from the last time that we spoke? Can you confirm that, growth will be at the lower end of that guidance?
Yeah, thank you. Good morning, everyone. Thanks, Prashant, for having me on the show. And to just answer your question, I think we have guided that we want to be we will be between 15 to 20% earlier this year. And we said we would be on the lower end of the guidance based on what we have seen in the first 6 months of the financial year. And we do see some of the tailwinds of the industry, be it on aerospace, energy and sustainability, automotive, continue to be strong. So with that in mind, we said we want to really keep the guidance intact, but guided that we would be on the lower end of the range.
So what does this mean for your EBIT margins? Earlier, you had said that you have an aspiration of hitting the 20% EBIT margin level. In terms of a timeline, what are we looking at?
Yeah, I think we kind of really said we want to do for this year, we want to increase by 150 to 250 basis points. We want to keep that intact. And we said from a medium to long term, our aspiration is maybe over the next 3 to 5 years, we want to get to what we call them as an 18% and probably improve further on. Our intent is to share that we are in the trajectory of improving margins, as you would have seen for the last 2.5 years. Our intent is to keep the trajectory intact.
Okay. Earlier, you had mentioned that your growth strategy is built on driving expansion through M&A in various spaces, right? Whether it's aerospace, connectivity, energy, etc. Where do you see the maximum amount of traction in the next 1 year, and what will the focus area be for Cyient?
No, we said our focus is to really drive the organic growth. I think that's the primary objective. We created a diversified portfolio comprising of aerospace, energy, automotive and connectivity. And we said our intent is to make these 4 engines of growth to really do well for us. And anything that we need to do is to complement some of these white spaces in these verticals. We would like to look at M&A as an opportunity to create complementarity to our organic growth.
Okay, so let me just come back to pull you back to what we began with, which is top line growth, right? And there the problem has been, cut in spends by communication service providers, and that is where I think we've seen degrowth for the second quarter in a row. There was slowdown for the second quarter in a row. As we look ahead into 2024, do you see green shoots? Do you see a pickup here? By when? Can you provide some color?
Yes, I think, Prashant, we kind of anticipated the BEAD and RDOF program from US. I think these are being supported by the stimulus package that has been announced in US about 18 months ago. And this is likely to start hitting the states and start hitting the customers of ours. And we expect them to start sometime in early part of 2024, which will continue through the year. And we also expect wireless to recover and probably around middle of 2024 and the second half of fiscal 25 would be much better. That's our current hope. And we do see that as part of what the communication service providers have done in the last 12 months. As you can imagine, when the pandemic hit, I think communication was the biggest need. And there is huge amount of spend that has happened and across fiber, 5G, private wireless, and probably it is taking a breather. And as the economy starts growing, it should come back to the mainstream by sometime next year.
For telecom and connectivity in H2 of 24, compared to H2 of the previous financial year, could you provide us with a sense of what that may look like? Would it be flattish?
Yeah, I think it's difficult.
Yeah,
difficult to really put specific numbers on the H2 per se, Prashant, but we guided that we would be flattish as compared to Q2 of this financial year, and we expect some kind of a slight recovery by late Q4.
On offshoring, just one more point. I mean, it's come down to about 44% in the first half of the fiscal. Earlier, you were doing almost 55% of offshoring way back in 2020. Any long-term targets that you've set for yourself?
Yeah, we said between 2021 to 22-23, we have improved our offshoring from 45 to 55% as we started acquiring some of the companies which has on-site heavy presence, and this is a number that has come down. We probably expect we would likely to be around 50-ish over the next 4 to 8 quarters. I think that's the journey that we are on.
Okay. I wanted to check with you on, generative AI, the space that is sort of picking up quite a bit. You already have some successful products in this space. You've recently teamed up with Microsoft as well. Just want to understand, what is the potential here? Is it too soon to ascribe any value to this? And as a part of your business, what would it be, say, over the next 3 to 5 years?
Yeah, that's a great question. I think we said we want to be seen as an intelligent engineering and technology solution provider. And this is going to be accelerated through generative AI. We do expect that to start with. We are seeing many use cases around customer support, product support, customer experience, and making the technical documentation to be automated. I think we see a lot of opportunities around documentation to be automated. Some of the audio, video could be automated. The annotations could be automated. But over a period of time, we expect product design would also start having an impact in terms of how the AI could reduce the time to market. And it is going to be augmented artificial intelligence more than what we expect it to be a disruptive AI as far as the product engineering business is concerned.
Just one last question. How much is aerospace, of course, is the big one for you. How much is that as a percentage of revenues? And, I think we've spoken before, and, that segment has been referred to as by the company as a bit of entering into a super cycle. Air travel, etc., of course, is already, global air travel is, I think, beyond the 2019 levels. We see very strong traction coming in from global sort of airline majors. The aircraft manufacturers, commentary has been very strong. Just a quick sense there.
Yeah, so Prashant, this is about 1/4 of our business is aerospace. And as we guided earlier, the travel is expected to double in the next 15 years as compared to 25 years cycle last time. And we do expect the defense spend to grow significantly, which is already at $2.2 trillion. This is our highest ever. And as you can imagine, the geopolitical challenges that we have seen in the last 2 years, this is going to really make the defense spend to go up significantly. As far as the super cycle is concerned, I think the commercial aircraft OEMs, which is a duopoly today, and need to take some definitive decisions around sustainable aviation fuel or about efficient aircraft engines with electrification or hydrogen. I think some decisions has to be made in the next couple of years, which will really kick off the engine program and leading to a complete platform development to launch into service by sometime in middle of the next decade.
All right, we'll leave it at that. Thanks a lot for joining in, and all the best for the new year. Your stock has created a lot of wealth for investors. The stock is up almost 200% in the last 12 months, and hope you continue to maintain that traction on the business end as well. Let's now focus on Polycab, which has been the other big mover, but today it's under pressure. Sources say that the IT department is conducting some searches at the company's various locations pan-India. Tim C is joining us on the phone line to give us more details. Tim C, what are you picking up?
Well, that's what sources are saying, that IT department is currently conducting searches at Polycab Industries pan-India, almost at 50 locations. And as we speak, the search is underway. The allegation is of tax evasion and unaccounted income. Let's see what happens finally once the search ends. What is the final outcome? We'll keep you posted.
Okay, all right, Timsi, thanks a lot for joining and explains why that stock is a little under the weather, down close to around 2.5%. Big wealth creator, but today under some pressure. Let's focus on another big winner this year. Maharashtra Seamless is up more than 180% in this year. The company recently won an order of around 180 crores from ONGC. Mr. Saket Jindal, the managing director of the company, joins us on the show. Hi, Mr. Jindal. Good morning, and thanks so much for joining in. Well, tell us, what is the updated order book post this order win? The last number we have is around 1,450 crore rupees. So, what does it go to?
So it's at similar value right now. So we are looking for more orders, and in the export, in the domestic sector, in oil sector. So currently it's a little sluggish, but it's expected to pick up soon. And we're talking to customers in USA and Canada to immediately book some new orders.
Okay, all right. Got that. For this year, though, Mr. Jindal, could you tell us what is the target in terms of the EBITDA per ton and for both your segments, that's ERW as well as Seamless, both on volumes as well as on the EBITDA per ton front?
Right, the EBITDA per ton, approximate 20,000 rupees per ton we are projecting, a little more than what it is now currently. So the demand outlook is positive, although currently it's a little sluggish, but the infrastructure demand in India is strong. And also oil and gas, the rig count in USA, Canada.
Yeah. Mr. Jindal, just to get that EBITDA per ton number out of the way, Seamless was around 25,000, while ERW was around 5,000. So on both these two, you want to give us the guidance on the EBITDA per ton from year on?
So I think we should be able to maintain what it was recently. We should be able to maintain, and little bit up and down depending on market conditions.
Okay, so EBITDA per ton at similar levels. And what about volume growth for Seamless and ERW?
Volume growth would be, I think the last year we did in Seamless more than 3 lakh tons. So we are targeting 4 lakh tons this year, provided the variables remain intact.
Okay. Nigel has focused a lot on the business, so I want to talk a little more about the other, the things on the side, right? So promoter holding for one, balance sheet for the other. On the promoter holding front, your promoter holding standing a little bit under 68% right now. Any plans to take it up further?
Creeping acquisition we can do, but otherwise it's expected to be stable, more or less stable.
Okay, more or less stable around 68%, got it. And any update on the balance sheet? You have cash on your books right now, I think a little under 1,300 crores. What do you plan to do with that? Any expansion plans that you're looking at?
We are looking for opportunities to invest. We already took over one unit in Hyderabad, which was a seamless pipe unit. And we want to maintain our core competence, and a related industry only we are focusing on. So like cold drawn pipe project, and also premium connections, and also alloy steel pipes. So these are some value-added products we're looking at, and also maybe coating facilities for like cement coating, which is also a requirement in the large dia pipes.
So, Mr. Jindal, you're looking at inorganic growth with this cash balance besides your capex plans. Is that correct?
That's right.
And by when can we hear about this? And what could the ticket size be? 100, 200, 300 crores? What could it be?
No clear figure right now. It all depends on what we are able to bag. Means the opportunity, what is available. But we would maximize our investments from our current liquidity into these only. Like utilization would be here.
Should we hear something by the end of this year, this fiscal, that is, before the end of March? Should we hear something in terms of inorganic growth, because your balance sheet is looking good?
Not so soon. I think it will take some time, I think.
Okay, and what about your rig business? That's the smallest part of your business, but that has been turning around. What's the plans out there? I think in the past the street is expecting
Yeah,
you at some point
the
in time
day
to maybe
rates
to
in the
go
rig
ahead and sell
business,
it.
the day rates have increased in the rig business. So
Yeah.
in a group company also we backed orders in ONGC. And our contract in MSL is valid for another year or so. So after a year, we'll have to renew the contract.
But will you look to sell this business? This rig business is very small part of your business. So just trying to ask you, have you thought of that?
No plans as of now. We are continuing currently. In the future, depends on the scenario, market scenario.
Okay, I wanted one thought from your end on the export business, because I think 60% of your order book comes from exports. Any
Right.
pickup there, any sluggishness, and how are the export markets looking?
Export we are doing mainly to USA and Canada, and there we expect the demand to be robust with the rig count and the oil prices maintaining. So although recently there was some sluggishness, it is expected to be strong again, I think by early next year.
And any change in your contribution that exports will have? I mean, will it continue to remain at 60% of your order book, or do you plan to grow it further?
No, export, we are trying to increase the export, and we are trying to get orders from, like in Saudi Aramco, there are some projects of LNT which we are also aiming at.
Okay. And exports as a percentage of your revenues is 30% approximately. Of your order book, it's higher. But
Yeah.
as a percentage of your
30%.
revenues, it's what? 30%.
30%.
And since we're getting into a general election here in India, in the run-up to a general election, do orders start getting a little bit muted? Do you see a reduced ordering, or how does the trend behave in the past?
I think it doesn't affect much. It remains intact.
Okay. Got it. All right, Mr. Jindal, thanks so much for joining in. You've given us a fair sense in terms of business and the business going ahead as well. It's been a good year for your shareholders, so we wish you well. But I think quite a few times in this conversation, you use the word sluggish. So we'll have to see how things move from here on as well, though the stock has done pretty well. Well, the markets are holding well in the green. So let's get Mitesh back with us. I think we're higher. We're up by close to around 60 points the last time I checked. Mitesh, what would you do from here on? The markets are now up close to 80 points. Trail your stop loss?
Nigel, I think, very clearly we have talked about the fact that this next few days could be choppy and consolidative, and at 21,350 was one of the pivots which I was looking at. We are close to that. We've had a high of 21,347. But in case you get beyond that, then I think 21,550 is the next area to watch out for. So I think it's still, that view still remains that, it will be a range market. So instead of trading stop losses, which is what we do in a trended market, I would suggest people to take some profits, book half the position out, and then trail your stop losses to about 21,290 on the spot. And in case 21,350, 360 is taken out, then we might, want to look at another 150, 200 point kind of this move continuing by another 150 to about 200 points. So maintain a long bias, but yeah, be slightly nimble in taking profits.
In terms of individual trades, Mitesh, what would you have?
On the stock side, Prashant, I have a buy on Kotak Bank. It's managed to get past the swing cluster on the intraday charts of 1855, 1860. So keep a stop below 1855. Look for targets of 1910 to begin with, though I suspect eventually we are looking at much higher levels as well. And the other one which I like is HDFC Bank, but here I would want to see the stock get above the highs of 1685. So it's a conditional buy. Buy above 1685, then keep a stop at 1665 and look for targets of 1720.
All right. Well, thanks a lot, Mitesh, for that. Let's move on and focus on IIFL Finance. There's been a large trade in the stock. Nimesh is tracking the stock for us. Nimesh, what are you looking at?
Hi, Sonia. So as you rightly pointed out, there is a large block in IIFL Finance today morning. Nearly a little over 5% equity got changed hands. I understand Fairfax, who is a strategic partner in IIFL, they were the sellers in today's block. So if you look at the shareholding pattern, Fairfax owned little over 20% stake in IIFL, close to 20.9% to be precise, and they've sold 5.2% today. So they will be left a little over 15% stake in IIFL Finance. What I understand, this is going to be a last lot from Fairfax. They won't be selling further and hold on to the remaining 15% stake. Of course, we've not reached out to either IIFL Finance or Fairfax for an official comment. In terms of buyers, I understand the Singapore-based fund was an anchor investor in today's block deal. So a couple of long-only funds have bought in today's block. Some domestic mutual funds and AIF have also participated. So it's gone to strong hands. There was a slippage as well, is what I understand from a block perspective. But in terms of seller, Fairfax was a seller in today's block. And as I said, some long-only funds and domestic funds were buyer as well in IIFL Finance today.
All right, Nimesh, thanks very much for that. So about a 5% cut coming through on that one. We'll take a quick break here. Manisha will be with us to put the focus on commodities, and that's coming up just after a break.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Well, let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the crude oil prices because some strong gains is what we've seen come in for this week. The crude oil prices, the Brent that is trading near $80 a barrel. It's headed for a second weekly gain. But even with that, we are headed for a first annual decline in case of crude oil prices. And this comes in since 2020 there. What the markets are looking at is the Houthi attacks at this point in time in Red Sea. And there's a Bloomberg report suggesting that the oil shipments have declined by 40% because of what's happening there. But the volumes itself within Red Sea are not so great because much of the global oil actually is exported via Strait of Hormuz from the Middle East, and those volumes actually have been quite on the stronger side. There's a lot of discounted crude as well coming in from that area. The markets also are looking at reacting to the latest developments, that is about Angola leaving OPEC, saying that it does not serve the country's interests because OPEC has put out an output quota cut for all of its OPEC members, and we do know that there is a discord among the OPEC members as of now, especially coming in from the African countries, and Angola has been protesting output quota cuts for some time now, so taking that decision there. Also, there have been doubts in any case on OPEC's ability to tighten the markets, and that has been weighing onto the street there. The US production on the other side also is at a record highs at 13.3 million barrels per day. Not just US, you have Brazil, Canada, Norway also increasing production. So much of the non-OPEC producing countries have been increasing production. That's weighing onto the markets. If you look at the prices itself, October and November have been the weaker months there. We've seen 10% decline in October, 8% down in November, and December so far has been trading quite on the marginal gains there. If you look at the volatility happening in case of the crude oil prices, that has been quite strong as well. We started this year with almost $82 a barrel. June saw a decline up to $70 a barrel. We did see prices gain up to 96 in the month of September. It was 82 is where it had declined by October. At this point in time, we are holding around that $80 barrel mark. But we have seen huge volatile moves coming in case of the crude oil prices in the last many months there. The last 3 months should come in on your screen. So 96 is what we saw in the month of September. If you look at October, November, December, from 96, we saw the prices decline all the way down to 74 on the weaker side. But currently, we are holding around that $81 mark. So in the last 1 month, we've seen the prices actually trade between 74 to 81 on the higher side. Talk about on what we are seeing in sense of outlook for 2024. Well, I'll start with the most bearish of them. Citi says that 75 of an average for Brent is what they're anticipating for 2024. It's between 80 to 85 for Goldman Sachs, JP Morgan and Morgan Stanley as well. 90 is something that we're not even talking about right now in sense of averages. So Bank of America on the higher side at 90. EIA talks about 86 to 87. 93 is what Barclays expects. S&P Global Platts talks about 85. So when you look at all of those price forecasts for 2024, well, all of them actually are within that 75 to 95 of a mark in the coming new year.
All right, Manisha, what happened to those outrageous calls? The fun calls. These are safe calls, right? All right, that's oil and commodities in focus. Manisha, thanks very much for that. We'll slip into a quick commercial break here. And on the other side, we discuss how serious is the rising number of COVID cases. My colleague Lata will get speaking with a couple of doctors. Dr. Shashank Joshi will be with us, and so will Dr. Laharia to assess this particular aspect as we head into the Christmas holiday. Stay with us.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. In the last 24 hours, India has recorded 594 fresh COVID-19 infections, we are told, while the number of active cases have increased from 2669 on Wednesday to 2311. Sorry, they increased to 2699 from 2311. 6 more people are reported to have died of COVID in the last 24 hours. 3 are from Kerala, 2 from Karnataka, and 1 from Punjab. The bigger worry is the presence of a new subvariant called JN.1, which is derived from a variant called BA2.86, which is in turn a variant of Omicron. And that's perhaps the consoling factor since we have tackled Omicron. The World Health Organization has also said that JN1 spreads quickly, but it is not fatal. Yet the Central Health Ministry and state governments have called upon health administrations to prepare for more cases of hospitalization just in case. As for the markets, as you can see, diagnostic stocks have gone up, and of course, so have the markets in general, clearly on the assumption that this is not a big threat. Yet all of us will be headed to tourist destinations tonight or tomorrow. So to check out how safe it is for us to travel and what precautions we need to take, I have with me 2 experts, Dr. Shashank Joshi, member of the Maharashtra COVID Task Force, and Dr. Chandrakant Leheria, the very well-known public health and public policy, health policy expert. Doctors Leheria and Joshi, thank you very much indeed for joining us. Dr. Joshi, let me come to you first, sir. Can you tell us how much we should be scared and how much we should not be scared?
Thank you so much. I don't think we should be scared at all. There is no concern or panic. COVID has become like any other winter virus, like flu, cold, cough. So we need to be cautious and careful, but I don't think we should panic at all. This current JN1 variant is a derivative of Omicron, as you rightly said. And it is a variant of interest, not variant of concern, as per WHO. It is being investigated by various agencies globally and our INSOGOG itself. We should trust our health authorities for their guidance from time to time. And we need to protect our vulnerable groups. Except for protecting our vulnerable groups in crowded environments, I don't think there is any cause for concern. So like you have dengue, malaria, COVID has become endemic worldwide. And therefore, we'll keep on getting these variants. The earlier variants which were coming up were recombinants. This is not even the recombinant. So it's a very, very old derivative of the lineage of Omicron. And therefore, I think the panic is a little unfounded. And the only challenge is if there are vulnerable groups, we need protection. We need to be vigilant to the various health guidelines which come from state and center. And I think our pandemic preparedness plan, which got endorsed during the G20, is in place. So I would continue watching our Ministry of Health, Government of India's guidance from time to time with various state governments. And the testing frequency is very low. So even the numbers are very low. And the so-called reported deaths also, there is no cause of alarm. Usually the COVID infection, when you're in hospital, you are doing a test, and that is why we find out that the person is harboring the virus. But I don't think there is any cause-effect relationship between the death and the C19 virus. It is incidentally found. And that's very important also.
Okay, no, that's very important to take home, that it is not causally related. Dr. Leheria, we are all headed for holiday destinations. What should be the protocol? Would masks become important now? Should we go armed with AZ and whatever we took in the last round? And much more important, are those 2 vaccinations sufficient?
So let me start by echoing what Dr. Shashank Joshi said, that there is no need to worry. This is not even a new variant. This is a sub-variant of what we know as Omicron. What we need to remember, and here I want to clarify 2 things, that people often are saying that, okay, this has been designated as variant of interest by WHO, and that's why they should be worried. Rather, it's contrary. They should not be worried. Variant of interest simply indicate that it is a variant which should be monitored or watched by the government. So it's a call to action to the government that monitor, and that's the function of the government. Only time when people can be worried is when there is a new variant of concern. But the last variant of concern which had come is Omicron, which was first reported November 2021. So for last 2 years, there had not been any new variant of concern. So this is not a variant of concern. Do not worry. Do not panic. That's one. Second thing is that you also shared the numbers are rising from 2,300 to 2,600. But we need to remember that after this kind of awareness, there is an increase in the testing. And if you increase testing by 5-fold, the number will go 5-fold. So absolute number has a limited value. We should be looking at proportion. So I am not concerned about the rising number also, because we are increasing testing. That's why what we are getting this thing. Third thing is that because this is transmitting, and that is the nature of any respiratory virus and SARS-CoV-2, that with the time there are new variants or some mutations into it. So that's what is happening. So just because there are mutations is not a concern. So theoretically, if we sum up everything, not much has changed for us. So do not change your travel plan. Keep living your normal life. Nothing has changed. What one should do, of course, what Dr. Joshi also highlighted, that people who are has a pre-existing morbidity, they need to be a little careful, especially in the crowded place. So if you are going to holiday destination, if you are in a crowded place, if you feel like you can wear mask. More important is that one should be taking care of their pre-existing illnesses. So take medication for existing illnesses. If you are healthy, you will be protected from other illnesses. Other thing is that if someone has a flu-like symptoms, that person could be advised that stay home or definitely wear mask, so you do not pass it on to other family members or other individuals. And it is not about SARS-CoV-2 or this JN.1 also. We need to follow all the time, especially in winters, the respiratory etiquettes that cover your mouth, sneeze in the arms, or wash your hands, and all of those are respiratory etiquette which we need to follow, and that's what we need to do for JN.1 or SARS-CoV-2. So SARS-CoV-2 is just like any other respiratory illness. It will continue to be just like any other respiratory illness.
Okay. So you know what? We stopped wearing masks, Dr. Laheria, and we stopped carrying sanitizers. To be fair, I still have a sanitizer in my bag, but I don't use it. And in our office, we had a sanitizer every time we open a knob. There was a sanitizer ready over there on the wall. That regimen has now relaxed. Do you think the regimen needs to come back, albeit briefly, Dr. Laheria?
No, I don't think that regimen need to come back. All we need to do is follow a standard hand hygiene practice or respiratory etiquette practice. Not because there is some spike in certain cases, we should bring that regimen. We need to follow hand washing practices which prevent from many illnesses. I also want to flag quickly here that, for example, you gave the number of 6 deaths which are attributed to COVID-19. Dr. Joshi highlighted that those are not causally linked. But more important is that in India, every single day, there are around 28,000 deaths. So in comparison of 28,000 due to old age or other illnesses, 6 deaths is a very small number. So we should be, there are other concerns such as air pollution, which cause more number of deaths every day. So we should be more concerned about other things. COVID should be given proportionate importance, not disproportionate importance. And we know number 6 is much smaller in comparison of 28,000.
No, absolutely. That's well spoken, sir. I remember even last time you said that we should not let our children's education suffer because we are giving disproportionate attention to what is perhaps something that can be cured with normal hygiene practices. Dr. Joshi, the more important point, are those 2 vaccinations sufficient? There are some people, everyone has 2 vaccinations. A few people have 1 booster. Very, very few people have 2nd booster. Any advice there?
I don't think we have any data to suggest anything further now. So I would wait for the government authorities to do more research in this and more science. And right now, I would go by the government guidance. I think we have to, it's a mild variant which we are encountering. We need healthy practices. It is like any other winter virus, as Dr. Laheria said. And we have pollution and winter around. So you need good hygienic practices in general for general hygiene. And beyond that, I think we should not give any undue importance.
Okay.
We need to be vigilant. The researchers and scientists, I have full faith in our governmental authorities. They will do their job. And when the guidance comes, we should follow that.
Okay. No, absolutely. We have faith. So I'm not rushing to get the 2nd booster. I did take 1. But Dr. Joshi, I want to give you credit publicly for one thing you told us. It was, I think, the 1st or 2nd of March of 2021 when you were on the channel and you said somewhere in Amravati we are noticing one variant which is galloping much more, and we have sent it to INSACOG for genome sequencing. And lo and behold, we had Delta on our hands. So do you think genome sequencing is something, or whatever, I don't know if I'm saying the right terms, for the health administration and the research authorities to be very careful about, that another variant doesn't jump on us without our being prepared?
No, they are constantly doing genome sequencing, Lata, continuously batch by batch, and it's public knowledge now. The GCID is a global website, as well as the Indian INSACOG. Even in Maharashtra, there are people from Pune who have their own microbiology genome sequencers by government of Maharashtra. So there is constant, microbial vigilance which is happening, and the ICMR and the health authorities are studying it. But as I said, there were some recombinants in the last 2 years, but they were also not a cause of concern. And this is, as I said, is a Omicron derivative. So I think we should just wait and watch. But yes, science and research should continue, because we have to have a pandemic preparedness plan in place, and science drives this plan. And you are very right that that time we had a real hotspot there. It turned out into a very sinister Delta, but Omicron was the chain breaker, and this is a Omicron derivative. So I think all is vigilance, science, but I think no panic.
Okay, thanks a lot for that reassurance, Dr. Joshi. We know that people like you and Leheria and doctors in INSACOG are absolutely up to the task. And of course, even BMC rendered a brilliant account of itself in the administration of vaccine. Any last word from you, Dr. Leheria, before we wind up?
I think we should learn that SARS-CoV-2 will continue to have various subvariants. Once in a while, there would be a slight rise in the cases. We should trust authorities. We should keep watching about it. But there is no need to worry or panic about it. In fact, I believe that SARS-CoV-2 has become just like any other respiratory virus. And we should protect ourselves from any respiratory virus. We should take measures to keep ourselves healthy by eating well, regular physical activity, and good hand hygiene. And that's enough to prevent from majority of respiratory illnesses. If you are pre-existing illness, get treatment. That prevents from many other illnesses.
Okay. Thank you very much, Doctors Leheria and Joshi, for setting our mind at rest. We have all booked our holiday tickets, and the stock markets are absolutely going from strength to strength. So clearly no one is in a state of panic at this point in time. But it feels very good to hear that from the two of you, who know much better than all of us. A very happy Christmas and New Year to the two of you, and to everyone who is watching us on Bazaar. Great happy holidays to all of you. Thank you very much for watching this edition of Bazaar. Chartbusters after a break.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
All Cargo Logistics announces scheme of arrangement where the international supply chain business of the company will be demerged into a separate entity. All Cargo Logistics will hold express and contract logistics business, while All Cargo Gati will merge with All Cargo Logistics.
LIC jumps over 5% as the government grants the company a one-time exemption to achieve the mandated 25% MPS norm within the next 10 years.
Adani Ports rises nearly 3% after UBS issues a target price of 1175 rupees a share, around 10% higher than the current market price.
Siemens rises nearly 1.5% after giving a bullish outlook at its analyst meet. Brokerage house Jefferies also hikes its target to 5,000 rupees a share, citing a strong capex outlook for the Indian market.
IIFL Finance slumps nearly 4% as 6.5% equity worth 1358 crore rupees changes hands at an average price of 555 rupees. Sources say Fairfax has sold over 5% stake but remains committed to holding its remaining 15% stake in the company.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu, and this will be the last Chartbusters that we're anchoring it together for this calendar year itself. And the markets, Mangala, for the time being, looking very, very good. 100 points on the Nifty.
Century at the open. We have a triple century on the Sensex as well. The mid-cap index up by almost 400 points. Looking good, and